when we look at what the Fed is doing, and certainly all eyes are on the Fed the last several months, when we look at what they're doing and it's these drastic interest rate increases that, I mean, we've seen it happen 1,000 times before throughout history, right? It's not going to be any surprise. An official recession will be announced probably sometime next year, and then the Fed will back off. They'll start lowering rates. And we will all have a chance, if we're taking out loans right now, or maybe we're paying cash for properties, we'll all have a chance to refi our properties and make the deal better. Remember what I've always said. This is one of the prime sort of golden, wonderful benefits of income property, the most historically proven asset class in the entire world. What is that benefit? Look, think about it, folks. In life, we've all been in deals with people. We've all made agreements with people. And then the person on the other side doesn't keep the agreement. What do we call those people? We call them weasels. We don't like doing business with those people. And sadly, they seem to be becoming a lot more common nowadays, those weasels. But anyway, what if we got the chance with our deals, with our investments, to renegotiate the deal all along the way without doing anything wrong, without being a weasel, without taking advantage of anybody? And that's the way it is with income property, because we buy the property and then we can turn around and renegotiate the deal throughout our ownership. We can refinance it. We can improve it. We can change the capital structure. We can do 1031 exchanges and basically renegotiate the way our whole portfolio works. We can change the rental arrangement with the tenants. One of the things we're going to be talking more about is we're going to be talking more about doing rent to own deals. And those are pretty darn interesting in some cases. So we're going to be looking into a lot of this stuff in future episodes. But for today, let's just realize that the way the Fed is acting now is pretty much unprecedented, but it will change. The pendulum always swings back and forth. As they cool the economy off, they'll overreact. And then what will they do? They will lower rates and they will try to stimulate the economy and get us out of the recession that they, of course, put us into. And we're already seeing signs that inflation is moderating. I'm going to show you a chart probably next week on an episode. I just got this chart, and it's the Baltic Index. This is the shipping index for container shipping around the world. And it is showing drastic price reductions in container shipping. What does that mean? That means demand is subsiding. Supply chain shortages, or supply chain bottlenecks, I should say, are easing dramatically. And problems are starting to finally be solved. And this reduces the inflationary pressure, which ultimately means will lead to lower interest rates. But the other thing is, we've got to always remember, when we consider what the Fed is doing and the way they're acting, we've got to remember that the Fed, a huge part of their fight on inflation is related to housing costs. Because the way they figure housing costs in the consumer price index is this crazy owner's equivalent rent. I've talked about it on past episodes. I won't go down that rabbit hole today.